Hey everyone, welcome back to Corporate Decoder. Today we're diving into the world of airline finance. Get ready for some turbulence because we're looking at how American Airlines is shuffling its debt and dealing with some upcoming payments. It's not quite a smooth landing, but we'll break it down. American Airlines has been working on its financial arrangements. They had this loan and they've basically tweaked it. It's like refinancing your house, but on a much bigger scale. Let's see what they actually did and what it means for the company. First up, American Airlines made a deal to change some of its loans. Think of it as swapping out one loan for another. On March 24, 2025, American Airlines Inc. made some changes to their loan agreement. It's called the Second Amendment to Term Loan Credit and Guarantee Agreement. They did this with the lenders, the people who gave them the money. This loan thing is called the 2021 Credit Agreement. So what did they change? Well, they had loans worth $275 billion, which is a whole lot of money. These are called the prior 2021 term loans. They replaced them with new loans, the replacement 2021 term loans for the same amount. The new loans are mostly the same, but there are a couple of key differences. First, the interest rate, the amount they have to pay on top of the loan, changed. The new loans have an interest rate based on either a base rate plus 1.25% or a SAL-FR rate plus 2.25%. Or a SAL-FR rate plus 2.25%, not a huge amount, but it does free up some cash in the short term. Now let's talk about some notes they have like IOUs. American Airlines Group Inc. will pay off its 650% convertible senior notes due in 2025. They're paying in cash, which includes converting them to stock at a price of about $22 per share. The company sent a notice to the holders of these notes saying that they will pay them off in cash. That way, no shares of American Airlines stock will be given. The company will do that only if the stock price stays below $22 during a certain time. Because of this, American Airlines is changing its forecast for the number of shares they expect to have out there for the year ending December 31, 2025. This affects how they calculate earnings per share, which is a key measure of how profitable the company is. Let's quickly understand the numbers if earnings are above $500 those numbers. Well, calculated $2 million, the basic number of shares is expected to be 60 million. And the diluted is at 9 million. Finally, if the company has a net loss, both basic and diluted shares are 660 million. And the diluted is at 660 million. And the diluted number, which includes things like stock options, is 60 million. And the diluted is at 660 million. And the diluted number, which includes things like stock options, is 660 million. And the diluted is at 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 660 million, and the diluted is at 660 million, and the diluted is at 660 million. This is the actual legal document describing the loan changes we discussed earlier. It's full of legal jargon, but it basically confirms the details we just went over. This is the notice American Airlines sent to the holders of their notes, telling them about the change in how they'll be paid off. Again, it confirms that they'll be paid in cash, not stock under certain conditions. Now, what does all this mean for American Airlines? First, by tweaking their loan terms, they've bought themselves a little bit of breathing room. Reducing the amount they have to pay back each quarter gives them more cash on hand to deal with other expenses or invest in the business. Second, paying off the notes in cash avoids diluting their stock. If they had to issue new shares to pay off the notes, it would reduce the value of existing shares. By paying in cash, they avoid this. However, it's not all good news. The interest rate on the new loans is potentially higher, which means they'll be paying more in the long run. They are taking on more risk. Also, paying off the notes in cash requires them to have a lot of cash on hand. This could limit their flexibility to invest in other areas or deal with unexpected challenges. Looking at American Airlines' overall direction, there are some clear strengths and weaknesses. They are a big player in the airline industry, but they also have a lot of debt. Managing that debt is a constant challenge. A potential risk is that fuel prices could rise, which would increase their costs and hurt their profitability. The company acknowledges these risks. They include a cautionary statement saying that there are risks involved that the company is not aware of and that the future is uncertain. All companies do that, but what is more important is what they've shown by the numbers. In conclusion, American Airlines is making moves to manage its debt and financial obligations. These moves have both positives and negatives. Whether they ultimately succeed will depend on how well they manage their costs, generate revenue, and navigate the challenges of the airline industry. I'd say the next year will be a challenge and a good measurement of how they are doing. Thanks for watching Corporate Decoder. If you found this analysis helpful, please like, comment and subscribe for more deep dives into the world of corporate finance. Let me know in the comments if there's a specific company or financial report you'd like me to decode next.